Welcome to the ProFarmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The ProFarmer Podcast starts now.
Welcome to the ProFarmer Podcast, everybody. Davis Michelson here with you along with Hillary Mason. It is April 7th, 2025. Hillary, a heck of a week in the markets. Last week we had corn mixed on Friday. Wheat futures were a little bit lower. I think there may be some weather concerns coming in to help these wheat futures out here over the next couple of weeks, maybe. But soybeans really took this tariff news hard. There were a lot of stories to choose from for these markets. Can you tell us what the markets were most squarely focused on last week?
Absolutely. Early on, obviously on Monday, we had our prospective planning and quarterly stocks reports, which typically can bring some surprises, but that just wasn't the case this go around. Even though corn plantings were 1 million acres higher than what the market had expected on average. And, it was interesting. It was a rather muted response across the marketplace. Soybeans kind of took it on the chin as the market went on. But, on Tuesday, soy oil rallied and kind of brought the soy complex out of the trough. And then at midweek, the real focus was on the Liberation Day on President Trump's tariff announcement, which caused a pretty severe sell-off immediately and overnight trade in the ag complex.
Now, we had lamented that prior to these reports, corn and soybeans to a lesser degree had gone back into that trading range that we were stuck in for so many months back last summer. Is this pushing us back into that area, or perhaps pushes us out the bottom, and then maybe we get a chance to bounce back through the top of it in corn?
It's a great question. I think corn definitely, I think things have stabilized for now. Corn certainly will probably remain stabilized, although crude oil could continue to add pressure. It just keeps getting beat down. So that could limit some short covering in corn. However, it seems as though we've got some short covering in wheat and soybeans this morning. So maybe we've found a bottom for now. I'm hopeful of. But time will tell. We'll see what this week brings as far as negotiations, any more reciprocal tariffs. So
right. Well, let's talk about that. Let's set up the best case scenario here for this week's market action ahead. What would that look like for you, Hillary?
Oh, golly. I mean, just continued short covering, just confirmation that we found near-term lows in corn, soybeans, and wheat. Again, oil could be the cast can continue to cast a shadow. But yeah, no, hopefully we just keep getting some confirmation that we found near-term lows. So.
And talk to me, you as a market analyst, and everybody has different opinions about this, but in your world view, I mean, the crude oil market, Saudi Arabia is talking about backing off some production cuts. Prices are already, pushing against low 60s here. How much impact does that crude oil have on the rest of the commodity markets?
I mean, it's incredibly impactful. Incredibly, and it just to tie in a bit. So, low oil, I mean, it's obviously it's going to bring lower prices, and it could help with inflation. However, you've got some major recessionary fears that are kind of creeping into the market, the global marketplace again. And so that could keep a limit on, equities, and just the marketplace in general. So.
Very good. Well, Hillary, I won't take up much more of your time. I know you're busy on Monday mornings. I appreciate your words here. We'll talk to you again real soon. Have a great week, Hillary.
You too, Davis. Thank you.
All right, everyone, stick around through these words. I'll have another conversation on the other side. Stand by.
Hey, everyone. Davis Michelson here, and if you're one of the listeners without access to ProFarmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to ProFarmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more.
Welcome back to the Pro Farmer Podcast. Davis Michelson here. Lane Akre joins me now. And before we get to the conversation, may I ask, don't forget to like and subscribe so you don't miss any of the Pro Farmer podcasts that will be coming up each week. Lane, I was just talking with Hillary. It was a heck of a week. We had some fundamental news along the way that the market kind of brushed off a little bit. The tariffs took over the headlines there. I don't want us to get too far past the prospective plantings report because we came in with a big corn number, and some are saying we could even see a bigger corn number by the time it's all in the ground. What are your thoughts on that prospective plantings report from last week?
Yeah, we'll have to see. Acreage came in a lot higher than our expectations from our survey. And generally when that happens, we see corn acres fall back down towards where our survey number was. And, bean acres came in below our survey number. And, when that happens, we tend to see bean acres rise. And a lot of it, especially this year with the rain that we've had in the Ohio River Valley, it's going to come down to planting and how fast those planters are able to roll. There's already some talk that some of these corn plantings might be getting switched to beans. And that would help bring that intention number down closer to where our survey number is at. So we're just going to have to see. A lot of it's going to come down to weather as it does every year.
Well, and we've got, speaking of reports, we've got a WASDE report coming up this Thursday. What are your thoughts? What are you expecting? What does the industry hope to see there in that report?
Yeah, industry isn't expecting too much change from March. The April report generally isn't one of the bigger reports of the year. This year, we had some anticipation that maybe the current tariff policies put into place are going to have a bigger impact on exports specifically, but pre-report expectations doesn't really show that to be the case. Most analysts don't see exports changing much from the prior forecast, and USDA was very clear in their March update that their forecasts are going to reflect current policies. Now on soybeans, I can understand. We've already shipped the vast majority of the soybeans that are going out for the year, so that soybean export number probably isn't going to change much. But corn, on the other hand, we still have a long way to go, and any restrictions in place, if Mexico wants to source any of their beans from their corn from Brazil, that could have a big impact on trade. And right now, it's just markets are kind of haywire, and until the dust settles, we're really not going to know where things are going to end up. So it's just a patient approach right now seems best, but we are a little bit less optimistic than the marketplace, especially on corn exports right now.
Well, and those exports, that's a number that I'll be looking at for sure, because Lane, if I heard you right, USDA is going to try to consider the tariff strategy, the current conditions, let's just call it, including the tariffs, into the numbers that we see on Thursday. Did I hear that right? I feel like that could have a massive impact on export demand, on export forecasts, and yet so difficult to handicap because, it's sort of just starting.
Mm-hmm. Yeah, that's right. And I think a lot of their hesitancy, and the analyst hesitancy in changing is, the marketing year is over halfway done now.
Right.
And USDA lowered their wheat export forecast, and that marketing year is almost over. They lowered it 25 million bushels in the last update, and they haven't changed much. I think the real tell will be in May. We've been kicking the can down the road on these export numbers for a while, anticipating these tariffs, knowing they're coming. But to see how USDA views it is going to be really key in those May reports when we're going to be getting the new crop forecast. And we'll see how much they really think tariffs are going to be affecting U.S. ag exports.
Right. Now, sort of staying on the tariffs, but switching markets, we've seen the equities go absolutely crazy. It's been a little hard to watch for some investors, certainly. But how does the volatility over in the equities reflect or show us anything about the commodity markets at all?
So right now, when markets are like this, we got stock futures down about 150 points, making more than 1 year lows. When markets are this volatile, VIX over 50, everyone's just going for the sidelines. So where funds are positioned, generally you see prices go opposite of that. So where we've seen really long funds, like in precious metals, we see extensive selling pressure. Historically, a safe haven place, they still see risk-off selling when markets are going haywire like they had been recently.
Yeah.
And you can even explain some of the strength we've seen in wheat and soybeans overnight. Funds are a lot of funds are short, so they're just going for the sidelines. They're bidding up. They're covering their positions. We've seen open interest fall across the agricultural markets just as people are going to the sidelines. And until the dust settles, that's probably not going to change a whole lot. This can be especially noted in the livestock futures. On Friday, we saw heavy selling pressure in cattle and feeder cattle and in hogs. Limit out and closes across all three. That's just people trying to get out of the way. A lot of uncertainty. Just go to the sidelines, wait for the dust to settle. And there's been no real fundamental shift yet, especially in cattle. We don't export a ton of beef. And cash cattle prices are still strong. They were steady going into Friday trade. And unless packers really just put their hands in their pockets on Friday, but I don't think they did, we're probably going to see at least steady trade come out for last week. And big discounts now in the cash cattle market. So that'll be a key market to watch this week to see once cash cattle or once cattle futures start to get bid back up again, you might be able to see normal trade return.
I would tend to agree. Well, let's look at Friday's closes. June fat cattle on Friday down $6.50. Down back below key $200 at $198.20. I mean, just that alone could bring in buyers, because I don't know that there's a sense that outside of this tariff stuff that the cattle market was done. What do you think?
Yeah, we have seen some of these large corrections in the cattle market over the past couple months. These steep sell-offs are generally bought back pretty quick. And yeah, no real fundamental shift in cattle, so it could certainly come back just as strong as it came down.
I'm going to put you on the spot, and then I'll cut you loose, Lane. What are you going to be looking for this coming week? What's the most important thing? What should we be watching out for?
A bit of a bounce back, especially in corn prices. Corn showed a lot of strength last week, and if that were to continue this week, that'd be a really good sign. But markets are really keyed in on equity futures, and until we see some type of stabilization, this volatility is likely going to continue. I don't want to call on a bottom by any means, but we've seen 3 or 4 200-point day plus moves in a row, and that's generally just going to continue to breed more volatility. And until that ends, I think it's going to be hard to say where these markets are going or what the near medium term directions are.
Yeah. Fair to say, regardless of any of that, now is not probably a very good time to panic, is it, Lane?
No, certainly not a good time to panic. Warren Buffett, famous line, be greedy when others are fearful and fearful when others are greedy. And fear and greed index is very fearful right now. So Wiesemeyer was talking about this last week on AgriTalk, but just being very mindful and understanding that this volatility is probably going to continue for a while, but take advantage. If you've got the means to stash some money away in the equity market right now, it might not be such a bad idea.
Yeah, preach. All right. Well, Lane, I'm going to cut you loose there. I appreciate you spending some time with us and for giving us some clarity on these issues here. So for Lane Akre, for Hillary Mason, and for production support provided by Zach Zengula, I'm Davis Michelson for the ProFarmer Podcast. Have a great day, everybody.
Thanks for joining us. We'll return next week with another episode of the ProFarmer Podcast. And remember, everything talked about today is updated throughout the week on ProFarmer.com and in this Friday's ProFarmer newsletter.